Welcome back to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Today we're talking about tax credits for individuals, for business, and for real estate. Please welcome my next guest. It's David McMillan. David is president of McMillan & Associates. McMillan & Associates provides comprehensive state and federal tax credits for businesses. David, thanks for joining us again in Studio One.
Thanks, Michael.
We appreciate you having you on. And what should be one of the first things that companies think about it, and why should they look for these tax credits?
Yeah, I think first off, it starts with I'm paying taxes, and I don't want to pay as much as I'm paying right now to the government. I think that's what drives companies to take a look at strategies and opportunities to reduce their taxes.
Mm-hmm. Okay, and what about some of the first steps? So they've decided, all right, I'm paying too much taxes. I don't know who doesn't say that, right? And you're running a business. So where should you look? What's the first step?
Absolutely. Well, all tax credits for businesses start with the simple premise that business activities drive these tax credit opportunities. So the first step is to take a look and say, what does my business do? Am I hiring people that might be eligible for a tax credit? Am I training my people on something that might be eligible for a tax credit? Have I created a lot of new jobs? Have I done research and development or invested into machinery, into our manufacturing process? So the first step is, what is your business? Where am I located? And what types of activities am I doing that might trigger a tax credit event for the organization?
Okay. And how much work is involved in this process?
That's a great point. People ask me that a lot, well, how much is this going to take of my time or my team's time to capture this tax credit? Well, I think, first of all, it starts with, can you develop a system inside your company that tracks whatever you need to for tax credits? I think if you can put it into your culture, into your system, and develop some standard operating procedures, it makes the process a lot easier. The analogy I use is at the end of every year, your CPA sends you a big, thick packet, your tax planner. And the first thing I do is I dump that thing into the trash because I'm not going to fill out that big, thick tax planner.
I thought I was the only one that did that.
No, I do it too every time, even though I know my accountants really well. But if you keep a folder with all your tax information throughout the year, all your paperwork and receipts and everything else, it's a lot easier if you do it throughout the year than waiting till the last minute and then having a big stack of stuff to go through and fill out. And that's what we advocate to people. Simple process, saves you a lot of time on the back end.
Well, what if I'm running my company, and I do run my company, and I expect my accountant maybe is doing this type of thing for me, but maybe they're not?
That's a great question. Does my accountant handle this already? And I'd say 9.9 times out of 10, your accountant isn't doing this already. And it's because tax credits are such a very special, tiny part of the tax code that, one, most people aren't educated or aware of all the different programs that are out there, let alone have the time and energy to devote to doing all the documentation. I think Ricky pointed to that earlier about all the documentation and that's required to mitigate the risk in dealing with taxes and tax credits and tax strategies. So it's usually not something that CPAs do. If your CPA is doing it, great. I would say make sure you're capturing every tax credit that's out there.
Because you work a lot with CPAs and folks' accountants, right?
Absolutely. In many cases, the documentation we prepare, 5-10 inches worth of documentation for a single tax credit project, and you probably wouldn't want to pay me by the hour to do that much work.
Let's see. Well, let's talk about some of the individual tax credits. So you talked about hiring and creating jobs. So the employment seems to be picking up. Companies are hiring, so there's still tax credits available.
Absolutely. So every state's a little different, but I'll start with the federal. There is one federal tax credit that the government has essentially designated certain types of people that they want to get back in the workforce. Mm-hmm. One of the big categories is veterans. You hire a veteran that could be unemployed or on government assistance program, looking for a job, that's a tax credit. It could be somebody that's on government assistance programs like food stamps or welfare or supplemental security income. That could be a tax credit.
Now, would an employer regularly know that?
No, they don't normally look into this because most people don't claim tax credits, but it's a very simple questionnaire you get your employees to fill out. It's something that actually gets approved by the government, so you actually end up with a letter that says, Michael, you're entitled to a tax credit for hiring James because he's a veteran. And that could be worth anywhere from $2,400 for some of these categories, and if you hire a veteran, it could go up to $9,000.
Wow.
Just for hiring one person.
Wow. And I think veterans make good employees as well.
They do. We hired one earlier this year, and it might be a $4,800 tax credit.
Wow. So it depends on the state I'm in. I might have a state tax credit. I might have a federal tax credit.
That's correct.
So how can I find out what possible tax credits I might have for the employees I'm hiring? And does it have to be a new, so if I've got 100 employees, do I need to have 110? I get look at those
Could
10?
be both. So I think it's just for their hiring tax credits, just for normal hiring veterans and just normal turnover that you would have in your business. And then depending on your industry and where you're located in your state, most states have some type of job creation tax credit, whether you're in Florida, Texas, California. Many states have some type of program. You're creating new full-time jobs. Sometimes you have to be in a favored industry by the state, like tourism or manufacturing or warehousing and distribution, but most states have some incentive for creating new jobs.
Okay. Well, stay tuned. We'll have more on tax credits for businesses and for individuals. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Today we're talking about tax credits for business, real estate, and individuals. We have David McMillan here with us with McMillan and Associates. And David, some people may be worried that if they do these tax credit programs that it might trigger an audit. What do you say there about the risk?
There's always risk when you're dealing with taxes. So I think there's a couple things to consider. I think tax credits don't necessarily trigger an audit any other than, you claiming a charitable deduction. The key is, do you have the paperwork and the support to claim that tax credit? So the second piece says, do you have all the supporting documentation to claim it? Many tax credits that deal with for businesses have some type of state approval, review, certification, pre-approval process, which definitely mitigates most of the risk because it goes through that pre-audit process before you can actually claim the credit. But in every case, you need to make sure that you have the documentation in place to support what you're claiming. Just like you would on your own personal taxes, if you're donating that car to the Salvation Army, you need to make sure you have your receipt. And if you ever did get audited, they're just going to look at your documentation. Great, Michael, you have it all together. You're fine. And it's the same premise for tax credits. Make sure you have your documentation in place before you do it.
So that state approval process may make it much more involved, but obviously makes it safer.
That's correct.
Okay. Talk to us about location tax credits, Dave.
Absolutely. That is one of the hot button topics really across the country. One of the ways that states encourage economic development is they pick out certain parts of land, usually by census tract, census block numbers, by zip codes, and they want to develop that specific part of land. So they're going to give companies an incentive to move into that location, hire jobs, they get sales tax benefits, they get job tax credit benefits, and that is a huge way that states do tax credits all over the country. Anytime you hear about a big company moving to a certain state and a specific city or a specific part of land, you always need to look for the backstory of where is that place located, what tax credits are available. Georgia has had a lot of stories like this. NCR is actually moving from Gwinnett into Midtown. Pretty big gap in location for a lot of their employees, but there's a tax credit for the place that they moved into. And you see these stories all over the country, big companies making big decisions, tens and hundreds of $1 million, and a lot of it has to do with the location of where they're putting the business.
What's the easiest source to find these location tax credits?
Great question. It's the governments. They don't necessarily make things very easy. So I'd say there's a couple places. One, you can go to our website at mcataxcredits.com, and then you can also go to the IRS website, irs.gov, and then you can also search for two places for your state tax credits. One can be the state's Department of Revenue website, and the second, you can find some good information on the state's economic development website. Usually every state has some type of economic development growth website that'll give you an idea of what some of these incentives are.
Okay. And David, can you give us an example of some of the savings that some of these companies have achieved?
Yeah, absolutely. We just finished up. It's tax time for us, so we're finishing up a lot of these projects. So we had a doctor here in the Southeast that he had 50 employees and he got $60,000.
50 employees?
Yep, 50 employees, $60,000 worth of tax credits. We had a restaurant chain with about 9 or 10 locations, and they saved $100,000 in tax credits for hiring people and doing some other various things. So I think people might be surprised that there's a lot of money out there. It's just not something that the government goes around marketing to people and say, here's how you can get this money from us and here's how to do it. They just don't tell you this unless you're a very large company, and they also don't help you with all the documentation and the paperwork, and that's the part that really stumps people from capturing this money that's out there.
And sure, and you want to make sure it's done right, obviously, to reduce the risk. So what are the costs for that example where the guy saved $100,000?
Yeah,
what was his
usually
cost?
there's about a 20 or 25 cent cost on the amount that's being found. So it's almost like swapping quarters for dollars.
Yeah.
Find a dollar, quarter fee.
Right. That's great. Well, let's say that you come in and you find a bunch of ways that I can achieve some tax credits. And can I go back to previous years where maybe I've hired people, I've done research and development in the past? Can you go back?
Absolutely. Depends on the different tax credit that you're looking at, but a lot of states have usually a 1 to 3 year look back period for tax credits. On the federal level, you can look back 3 years for the research and development tax credit. Some states, it just depends on what the credit is. One recent provision at the beginning of the year, the federal government renewed this new hire tax credit for veterans and people in government assistance programs, and they actually gave a grace period. So if you hired a lot of people in 2014, if you can get all that paperwork into the government by April the 30th of 2015, you can actually go back and retroactively claim all those people that you hired if they're on these certain programs. So in many cases, 1 to 3 year look back, but this particular new hire credit gives companies a big grace period to look back to everybody they hired in 2014 to possibly claim that tax credit.
That's fantastic. And it's a credit, right? This is not a write-off.
Exactly. And most of these credits are pass-through credits. So we're talking about tax credits for individuals. I know Ricky covered some of the things that affect the individual, but if you're an S Corp or LLC, these tax credits are flowing through to you personally to take advantage of on your taxes.
Okay, and let's talk about some of the other tax credits a business might find. How about research and development?
Absolutely. So one of the big things that's been in the tax law for a number of years, if you're creating software, you're making a product, whether it's a brand new product, improved product, you see a lot of manufacturers, a lot of software development companies, a lot of pharmaceutical companies. You can get a tax credit off of the wages and salaries and expenses that go into creating that new product that you're coming out with.
And how would you identify that in your business today?
I think the first question is, am I creating something that's new or improved? Whether it's a physical product, a part to a car, a food product, or am I developing software that's custom and proprietary that you're either selling to others or using internally? That's a couple ways, but it really starts with what are you doing as a business, and then you can look into tax credit opportunities available.
Okay, we'll take a short break and stay with us. We're going to have some more tax credits, and in fact, one I really like on training. This is Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. Xceligent, the resource professionals like CCIMs, CBRE, JLL, Colliers, and Bull Realty use for market intelligence. Commercial Search is the site to market and find available properties to buy, sell, or lease all over the country. Visit commercialsearch.com. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about tax credits for business, for real estate, and for individuals. We have David McMillan with us with McMillan and Associates. And David, one of the tax credits that I think a lot of people or a lot of businesses might be able to qualify for is tax credits related to training, right? It seems like most companies are doing some training.
Absolutely. Many states have some type of benefit where if you're teaching your employees certain things, a lot of times it could be software skills, technology, you're training on new equipment, that you can get a tax credit to offset all the salaries of your employees and sometimes even the vendor fees for training that go into that process. So for example, you're a manufacturer and you put in a new SAP or ERP system to take care care of everything in the business. You can get a tax credit depending on what state you're in based on all the salaries and wages and expenses to learn that software system. And that could be a huge tax credit depending on what industry you're in and what state you're in. So that depending on where you're located, you get a benefit for teaching your employees certain things that every company goes through.
And is that a tax credit for the salaries of the trainers or the cost of the training, or is it also the salaries of the downtime for the employees?
All of the above.
Wow.
All of the above. You can't count the actual cost of the software, but all the training expenses and salaries and wages, all that is eligible.
Okay, so if my employees aren't working for 50 employees aren't working for a full day,
because they're learning, you get to take a tax credit on that.
Well, that's nice, and I guess that's a great incentive for training, and it's great for the employees, and it's good for everyone.
It is.
That's fantastic. Well, when should companies start thinking about and planning for tax credits?
Absolutely. Well, most tax credits have some type of process and timeline. So I would say the answer is now. If you're a business owner, you're probably looking at filing your taxes, extending your taxes now, and this is when tax credits have to get put on your return to be able to claim them. But the answer is you need to start looking at this now and be proactive about starting the process, getting the documentation done, getting it approved, all within the right timelines to then be able to put onto your tax return so you can see the benefit at the end of the day.
Okay. Well, David, what about a tip for our listeners related to tax credits for the business?
Yeah, well, I just wrote an ebook about 7 ways to maximize tax credits in your culture. And I think the first thing that we tell people is to start with your why. I think you need to understand what you're doing before you can craft a strategy around it. So I think the first tip is, why do you want to pursue this? Are you trying to get every dollar you can, or are you just trying to focus on one or two things? But I think in order to have clarity and build a strategy to get all this tax credits, you need to understand why you're doing this, what's your purpose behind tax credits, and then you can craft your strategy. So first, start with why.
What's your second tip?
Involve your stakeholders.
Okay.
It's got to be a team effort. So you can't do it all by yourself, and it can't all be on one person. You really need to get key people inside the company as part of a collaborative effort to make sure you're maximizing tax credits.
Let's see if we can get through all 7. What's third? What's third?
Third tip is define roles and responsibilities. Okay. Any project doesn't have a lot of success if you don't define roles, responsibilities. And I guess maybe one final one that I'll talk about is we talk about maintaining momentum. So 3 keys to maintaining momentum: make it fun, make it easy, make it win-win. So a lot of times our clients, they have competitions between different departments to see who participates the most. Pizza parties, ice cream parties, manager at the restaurant who does the best gets like a free iPad. I think some of the ways to maintain momentum: make it fun, make it easy, make it a win-win for everybody involved.
And some companies are losing out on a lot of potential income here.
Absolutely. I mean, I would say from our experience in the last 17 years, less than 20% of companies in the country are taking advantage of tax credits. And I've never met a company in my career doing this that was actually looking at every single tax credit that was out there for the business. So I think there's always a lot of money left on the table that has a real impact to your business.
Well, good information, David. Thanks for joining us today.
Absolutely, Michael.
We appreciate you being on. And be sure and join us next week. We're going to have a great show. We're going to talk about crowdfunding. And crowdfunding for commercial real estate and real estate in general has been very interesting. It's been a growing area, and sponsors are able to go out and efficiently raise capital with investors. And investors can go online and invest in real estate and sometimes some fairly large projects very easily. So be sure and join us next week. And until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's RealNex. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.